in terms of short selling, which is my primary reason for using margin account, is to short sell. So there are times, or there are situations when I think the price of an asset will go down and I can profit from that by short selling. While normally the natural way of thinking for traders or beginning traders is that I want to buy something that goes up and I sell it higher. With short selling, you do the opposite. I see an asset and I think there's a downward trend that will continue. So I think that I want to sell high and buy low. Normally it's buy low, sell high. But in the short selling example, I'm going to sell high first and then buy low. Now, of course, how can you sell something that you don't own? Well, you have to borrow it. And that is completely seamless on most exchanges, including Binance. They basically they lend you the asset that you want to short. So you can borrow that from them. There is a small fee that they charge for that. But again, it's completely seamless. But that's what happens behind the scenes, is that essentially you are borrowing the coins and then you're selling it in the market, and then you're going to buy it back when the price goes down, hopefully. Why would I use it? I use it to reduce my portfolio risk. So while at the outset it seems like, wow, short selling is risky, it can be risky if that's all we do. Because if I sell an asset that instead of going down goes up, then my losses obviously are potentially even unlimited for that position. Now there is the good part about margin account is that you can have a cross and isolated margin. I'll explain that later. That will limit your losses. But again, the reason that I use short selling is not only or not primarily because I think that I can gain on that asset price declining, but really because I want to offset my risk in the long position. So let's just say I have 10 different long positions in 10 different coins. I'm owning it. I bought it. I'm very long, right? And if the market tanks, then I'm going to be losing a lot of money potentially. And so to offset that risk, especially like right now, as an example of we've had, we've reached some new all-time highs for Bitcoin, Ethereum, and now we've pulled back, and then we're at that iffy point where is this just a pullback correction, or will this be something more serious? So perhaps it's a good idea to put on some short positions, short sell positions, so that in case the market does tank, I can gain on those short sell positions that will offset my losses on my long positions. So you can almost create a market neutral strategy to where no matter what happens to the market in general, you're gonna be, net okay. And so you should, hopefully your long trades, if you pick them right, will still, in case the market goes up, your long trades, your buy positions will make more than you will lose on the short sell positions. So again, it's a way to, in some ways, hedge your market risk, hedge your volatility risk, hedge your portfolio at times when the uptrend is uncertain. There's increased volatility and uncertainty around whether we're, after making such massive gains we have in the last few months, there might be a correction, and I would use those short sell positions to kind of hedge that. And so what happens in terms of the math, we can go over the example that we have here. So I have $100. Again, I sell 25 coins at $4. And then if the price goes up, I'm losing money, right? I have to buy it back at a higher price. So I lost $25, okay? But no leverage. I'm not using any leverage here. The margin account in this case simply allows me to short sell, to borrow coins and short sell them. I'm not using any leverage. And I'm down 25% in this case. So it's the opposite of basically going long. It's going short is, when you go short and the price goes up, you're losing money. Where you gain money, obviously profits when the price actually goes down. So in this case, in the second case here, once again, I short sell $100 worth of coin XYZ. The price goes down from 4 to 3. Therefore, I gain $25. When I close that position, I have to basically buy the coin for less money than I sold it for. And therefore, I'm up 25%, or I gained $25 on that trade, right? How do I look for coins that perhaps are suitable for short selling? Well, again, the playbook has to be completely flipped over, right? While when we go long, when we're buying coins, we want to buy coins that are in an uptrend, buying coins that perhaps have had a bullish momentum MACD breakout, or are in an uptrend and have had a pullback, or are in an uptrend but are oversold, right? All the trading strategies that we've gone over so far have focused on going long, buying coins that are in an uptrend, and then some, and then something else, right? Well, we completely have to flip that around, and it's kind of hard sometimes to think, okay, well, which coins are going down? Because those are the coins that I want to short. I don't want to short those who have been in the uptrend. Okay, maybe the trend will reverse, but that's a tough bet, is to say, okay, the uptrend, the coins that's been going up, it's not going to reverse. I'd say more likely scenario is that the coins that have been going down will continue to go down. And if the market tanks, those coins will go down even faster. One source of good trading ideas is the pattern section. So in this case, we're looking for sell signals, right? We're not looking to buy, we're looking to sell. Okay, here we go. We've got several situations where the price is approaching support level, and the theory goes that it's likely to reach that support level. We could also say we want only breakouts, if that's what we want, right? And I also want to make sure that these are available on Binance. So I'm going to sort further on Binance. All right. So I've got some breakouts here. Some are day old, some are fresh, but I don't really care about just breakouts and emerging. Both emerging and breakouts have about the same level of success rate. So I'm fine with support level approaches as well. So I've got a lot of interesting opportunities now. The other thing that I need to make sure is that these coins are in a downtrend if I'm going to sell them and short sell them. So let's take a look at the first one, ACM. How do I check the trend? If I click on it, I have right on top, right, an indication, is this in a downtrend? It very much is on the short, medium, and the long-term basis. So this is a good candidate for shorting. Next one. This one only has very small profit potential, so I wouldn't bother with that, but it is in a downtrend. Filecoin, let's take a look at it. Also a relatively small profit potential, as you can see, about 4%, because most likely it's already approaching its support level, which is $50 indeed. So even though it is in a downtrend across the board, the profit potential is low. Let's look at some situations where the profit potential is at least 10%. ACM, we already covered. Here's another one, OGN. Okay. But this one may not be in a downtrend. I looked at it now. OGN is in an uptrend, so I wouldn't short it. No, I would not do that. CIS in an uptrend, BCH, mixed, that could be a candidate. Let's see, there's another one, Maker. That one's mixed trend. I would probably venture to do this trade as well, although there might be some more obvious. Ethereum Classic, yeah, this is probably a better candidate. So we'd had ETC and AMC, right? So let's go to Binance, and normally you'd go to trade, right? Advanced, we can do that. This is where you would trade in the spot market, buy, sell, so on. In the margin, you can go again back to the trade and click on margin. This takes you to the margin. The terminal, the trading terminal looks the same, but now it shows us what level of leverage you have potentially if you wanted to trade leverage. For example, right here, I go to the search box here, but here on the top you have ADA versus ETH and a 5x. Well, the 5x is telling us you could leverage that position. If you were going to go long or even short, you could leverage it 5 times. That's a lot. But we're not going to use leverage. We're really going to short, in the value of the assets or the collateral that we have. But one other thing I wanted to highlight is this cross versus isolated. Right here, you have 2 types of margin accounts, cross or isolated. And what that means is that with cross margin account, your position is collateralized with all of your portfolio. So if a particular position goes against you, it will not liquidate you until all of your collateral is used up. While the isolated margin account, which is the one that I suggest you use, limits your margin account and collateral to that one position that you create. Let's go ahead on Ethereum Classic. If I want to short sell Ethereum, and I'm going to do it Ethereum versus USDT, okay, I'll click on it. Now, if I short sell, let's say $1,000 worth of ETC, then in an isolated margin account, only that $1,000 or $1,000 or 1,000 USDT is at risk. The rest of my portfolio, which I think is about 17,000, is not at risk from this position. So if I short sell it, and for some mad reason, Ethereum Classic goes to 500 from 40, and I don't close it in time, then only that $1,000 is at risk. I may get liquidated, but only the $1,000 will get liquidated, right? In a very sort of extreme case, and you gotta think of those extreme cases. You don't want to expose your entire portfolio to some extreme one position. So that's why isolated is the way to go, because you isolate the risk, you isolate the position to just that collateral that you commit to that margin account for this particular trade. So I want to be in an isolated margin account. Now, first, I have to transfer some money from my funds into this isolated margin account that I will use just for this particular trade or this particular asset. So I'll click on transfer from fiat, right, in the spot account into isolated margin account. The trading pair is Ethereum Classic versus USDT. I don't have any Ethereum Classic, so I cannot transfer that in there. But what I do have is USDT, and I have just over $1,000 worth. So I'm going to put $1,000. All right, it's in there. So the pattern here states that, you know, we're going to go down to, let's see what the text here says, likely to move towards the support level of $42 or so. So we're now at 48, so that would be another 12% downside. So let's go ahead and do that. So we want to short sell. So we're going to sell here, and we're going to borrow because we don't have this asset. So we're going to borrow Ethereum. How much of it? $1,000 worth. So that's about 20.67 Ethereum that we're going to borrow and sell at price minimum of 47.80. No leverage, guys. I'm just selling it for $1,000 worth, just what my money affords me.